What is the housing market doing and where is it going? Hi, I'm Christa Joynt, a local real estate agent in central Kentucky. According to the Real Estate News, at the annual Jackson Hole Economic Symposium, Jerome Powell signaled that the Federal Reserve is ready to start cutting short term interest rates, which is exactly what the real estate industry and investors have been waiting to hear. Stay tuned for more local stuff towards the end. The Fed chairman's speech touched off a stock market rally and sent mortgage rates downward on Friday, August 22nd. All the major real estate stocks were significantly higher in early afternoon trading, with many jumping 5 to 10% halfway through Powell's remarks. Mortgage News Daily pegged the 30-year fixed rate at 6.55% that afternoon, down from 6.62% the day before. The key takeaway from Powell's speech: the central bank is now more willing to address the labor market's weakness through rate cuts, even if inflation is still higher than the Fed's target, according to Realtor.com senior economist Jake Krimmel. What that means for real estate is that a rate cut would have two significant implications for the housing market, Krimmel predicts. In the short run, 30-year fixed-rate mortgage rates should remain near current 10-month lows of around 6.5%. We've seen it hovering around 7% for quite some time now. And over the long term, a more balanced view of employment and inflation risks should reduce the anxiety that has kept many buyers and sellers out of the market. Going forward, resolving economic uncertainty will be key for restoring consumer confidence and jumpstarting the housing market this fall and beyond, Krimmel said. Cuts could revive buyer interest, while the Fed appears ready to take a more neutral stance on rate cuts, will be gradual and data dependent, according to Sam Williamson, senior economist at First American. But any reduction might be enough to perk up the market. For the housing sector, even modest rate relief could improve affordability, revive buyer interest, and offer a much needed boost to builders and lenders heading into the fall, according to Williamson. That much needed boost to builders would come in the form of lower borrowing costs for construction projects, which is welcome news for an industry that has fallen into a bit of a slump as it deals with higher costs and sluggish demand. Powell's speech also suggested that tariffs are not leading to persistent inflation and price impacts will be short-lived, according to Robert Dietz, chief economist at the National Association of Home Builders. That's a big deal for builders who have been hit with price increases on a lot of materials. Moreover, while not addressed in today's comments, some of the pressure from tariffs is being relaxed as trade deals are arranged and de-escalations of some trade tensions are undertaken, Dietz said, citing Canada's August 22nd announcement that it is dropping most retaliatory trade actions against the U.S. and the ongoing negotiations with China as examples. So, what is the market like locally in Kentucky? I've been hearing for about a year now amongst my colleagues that we are in a crazy weird market. It's difficult to describe because we've been in the midst of significant turmoil and change for the past 5 years. Looking back on COVID-19 and the impact regulatory changes made to real estate to keep the economy going, we saw homes sell with interest rates of 2 to 3% on average and sometimes even lower. Who would want to sell a home ever with that good of a deal on money? So there are quite a few homeowners who might have wanted to move, except for the fact that now they would have a 6.5% interest rate at best, rather than, say, a 3% interest rate that they got 5 years ago. We also still have buyers from 2020 sitting on the sidelines for various reasons. Some say that they were waiting for home prices that soared during COVID-19 to come down, and some sold their home during those years and just couldn't find another place to buy. Others simply have been priced out of the market due to home prices not really coming down much over the years, if any, and interest rates really haven't looked good either. What I am seeing in markets over 2025 here locally in central Kentucky is that homes in markets are taking a little longer to sell. However, when in good move-in condition, they are still typically selling. I'm not seeing many homes expire. In some markets close by, like in pockets of Lexington, there's still a 10-day or less average to sell. It really just depends on where you're going because markets can literally be different from one neighborhood to the next. Bottom line is, homes are still selling, although nationwide, we may see fewer sales this year than we did last year, or similar. If you're looking to buy or sell and could use some pointers, feel free to reach out via the information in the comments. Thanks and have a great day.